Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because global liquidity has finally been in an uptrend for 75 days now, and we are officially in the time window where Bitcoin has followed. Now I can already hear the comments being typed, actually it's not 75 days, it's 85. Actually it's not 85, I've noticed 95 works best. Actually, if you want to maximize correlation, you should be looking at 105 days, but my priority is not finding the best correlation with global liquidity and Bitcoin. I'm really just focused on the major market pivots when Bitcoin ends up finding a local bottom or when Bitcoin ends up finding a local top based on the local bottoms and local tops of global liquidity. And of course, this isn't an exact science. There isn't a whale waiting to market buy or market sell billions of dollars of Bitcoin the exact same day we hit 75-day lag from global liquidity's bottom. For example, after global liquidity bottomed in the 1st of November 2022, Bitcoin actually started its rally a little bit before 75 days. When global liquidity found its bottom on November 1st of 2023, Bitcoin didn't start its rally until about a week after 75 days. And as recent as the bottom we've seen on around June 30th of 2024, Bitcoin bottomed around August 5th, so well before 75 days, but it essentially chopped around for another month and a half and then really started its rally just under 75 days after that global liquidity bottom. And here we are once again, exactly 75 days after the global liquidity bottom we saw on January 10th. And it's nice to see that Bitcoin has already shown some signs of life, but this could still take another week or two if it's going to be similar to what we saw in 2023. And it's not an exact science of exactly what day Bitcoin will start its rally. But it is amazing that we're seeing some very clear confluence between what global liquidity is telling us and what we've seen from Bitcoin seasonality-wise over the past 10 years. In blue here, we have the average of the past 10 years of Bitcoin price action. And as you can see, mid to late February, all the way to mid to late March tends to be a very bad period for Bitcoin historically, but Bitcoin tends to bottom around late March and rally into mid-April, and then it has seen the biggest moves in about late April to mid-May, and that's almost exactly what global liquidity is pointing to as of right now. It says the next 2 months or so should be smooth, but as of right now, we've seen a local top for global liquidity around mid-March, and 75 days after that would put us at about June 1st, which aligns nicely with that rough time frame we're expecting in terms of a nice 1 to 2 month rally for Bitcoin based on seasonality and based on global liquidity lag. And it's great to see some signs of life already while sentiment is still quite fearful. This is exactly why I called Monday's free weekly report signs of life. Many investors capitulated over the past few weeks when we saw that huge drop to below 80,000, and we're seeing sentiment recover slowly, but it is still in the fear region. I would expect any bounces to get us back to at least neutral. So it's nice to see that seasonality is pointing to higher prices, global liquidity is pointing to higher prices, but investor sentiment is still quite fearful. So we'll see what happens. If this just ends up being a quick consolidation on global liquidity and it continues higher, then maybe we can forecast Bitcoin's rally going on longer. But if that was in fact the top for global liquidity at about mid-March and it's only going to go lower from here, then we would expect Bitcoin to top in mid to late May, and that would align with the sell in May and go away meme that everybody is familiar with. But as of right now, we should have at least a month or two of good price action ahead of us as Bitcoin prices in the global liquidity uptrend that we've seen over the past few months. And of course, one of the main deciding factors on what global liquidity does is the US dollar index. It's finding a local bottom here as of right now, which is why we're seeing a local top or the early signs of one for global liquidity as of right now. But this could just be a bounce for the US dollar index before it rolls over aggressively, or it could be the start of a new move higher that's going to rely very heavily on what the Federal Reserve ends up doing and what the market ends up anticipating in terms of Fed rate cut expectations. As of right now, the market is only pricing in 3. If it ends up pricing in a lot more, that would send the dollar index lower. If it starts pricing in a lot less rate cuts, that would send the dollar index higher, and that would give us a lot more clarity on what global liquidity is going to do over the next month or two. So we'll be following the inflation print we have coming up on Friday very closely. Core PCE is the Fed's preferred measure of inflation. Our last print was 2.6. The market is currently expecting a 2.7 print on Friday. If it comes in below expectations, that could cause the market to price in more rate cuts, which would be good for global liquidity. But if it comes above expectations, that would greatly concern markets. It would reduce our chances of more Fed rate cuts this year, and it would put downward pressure on global liquidity. So this PCE print should be quite important to Bitcoin and other risk assets because it's going to give us a little bit more insight into how much room the Fed will have to ease this year based on inflation. So we will watch that Friday print very closely because we are seeing the labor market weaken, but it isn't weakening fast enough to give the Fed an excuse to cut rates. And we are seeing traditional markets sell off, and we've seen a pretty big size drop in the S&P 500, but it's really not a big enough drop to make the Fed panic and start easing aggressively. So we're going to have to pay very close attention to labor market data, inflation data, and the S&P 500's price action over the next few weeks to see how that impacts Fed rate cut expectations. Because we know that risk assets are quite correlated. As you can see, Bitcoin has been trading in line with the S&P 500 very closely over the past few weeks because of all the macro uncertainty. But we are seeing some more Bitcoin specific promising signs, like our first hash ribbon buy signal in 8 months. And hash ribbon is just a cool metric that gives us an idea of whether or not we're seeing Bitcoin miners capitulate, which sends hash rate lower and impacts miner profitability, forcing them to sell more of their Bitcoin. And usually, once we see a recovery in the hash rate, it means that the miners sorted out. The ones that could no longer be profitable sold their Bitcoin and shut down. So we should see less sell pressure going forward. But the past 2 buy signals have had a choppy period after that signal flashed, but it did end up resulting in a big rally like the one we saw in late 2023 and late 2024. We did just get a buy signal once again this week. Again, it doesn't mean price is going to double tomorrow, but it does mean that after a period of consolidation and chop, we should see price go higher now that we're seeing less Bitcoin miner capitulation. And this aligns very nicely with what we've been seeing from long-term holders who have an even bigger impact than Bitcoin miners on price now. We saw them sell very aggressively into the March top. We also saw them sell very aggressively into the late December, early January top, and we saw them stop selling while Bitcoin was consolidating, and we've seen them stop selling once again here as Bitcoin has sold off and consolidated. So it's nice to see that 2 of the biggest sellers of Bitcoin generally, long-term holders and Bitcoin miners, should be selling less Bitcoin over the next few weeks. So I still think it's unlikely Bitcoin revisits the mid to low 60,000s. I do think we will find our bottom in the mid 70,000s to low 80,000s. Maybe Bitcoin comes down for a higher low before it actually recovers higher. And this ends up being a 80-day or 85-day lag after that global liquidity bottom. But I do believe we will bottom above this 50-week moving average and above our March 2024 high to maintain market structure before Bitcoin puts in its next all-time high. But the first and most important step towards that needs to be a reclaim of 90,000 to really give the market some confirmation that Bitcoin has bottomed here and it's time to chase price higher. It's nice to see that we're seeing some small ETF inflows. It's nothing compared to what we saw late last year, but it's still a lot better than the huge outflows we saw in February and the first half of March. And as long as we see Bitcoin consolidating in this range, I think investors will start allocating once again. And again, the big move would happen once we reclaim 91K. And I definitely believe we have the narratives and excitement to do so. For one, we're getting a new SEC chairman this week, and compared to what we dealt with Gary Gensler over the past 4 years, this is incredibly bullish for the space. We're seeing a complete shift from the SEC. They're planning on holding 4 more crypto roundtables on trading, custody, tokenization, DeFi, and even the thought of something like this 2 years ago under the previous regime would have been completely unheard of. And I still don't think the market has priced in this complete regulatory framework flip that we've seen under this new administration. And yes, we do still need to keep an eye on price action to confirm that these narratives are finally being priced in. A false breakdown being confirmed with a clear reclaim of 91K would be amazing to see, but most of our narratives are still in full swing. We're still seeing states like Arizona talk about Bitcoin strategic reserves. We're seeing the governor of Kentucky sign a Bitcoin rights bill into law. We're seeing North Carolina lawmakers introducing twin bills into their House and Senate, which could see up to 5% crypto asset allocated to state retirement funds. And we're seeing GameStop hint at future Bitcoin purchases. Again, I don't think this actually matters for Bitcoin in the long term, but I wouldn't be surprised if more of these zombie companies start adopting the MicroStrategy playbook and the Bitcoin treasury approach. And I think that narrative can get a lot crazier before this market actually ends up topping. So for me, I still remain optimistic. I still think Bitcoin has higher to go. I am leaning towards the early cycle, especially if we end up seeing this global liquidity local top here that we saw in mid-March, and it only starts going downhill from here. That would make me even more convinced that we're gonna follow the sell in May and go away playbook. But if we do see global liquidity put in a higher low and then break higher once again, we can start talking about the normal cycle scenario, and we still have our very clean invalidation, which would be losing the 50-week moving average and the March 2024 high, where we're just gonna have to accept reality for what it is, that the cycle for Bitcoin is more likely than not over. But as of right now, I see no reason to believe that, and I see no reason to be incredibly concerned in the short term, as long as we're trading above those key pivot levels and as long as Bitcoin is following global liquidity with that 2.5 month lag. As for my portfolio, no changes made this week because everything is still going according to plan. I'm still quite happy with my holdings, still majority Bitcoin, still have some altcoin exposure in case we do rally higher from here, and still have a decently sized cash position to limit the volatility in my portfolio and lock in some profits in case this bull run is over. And if you'd like more details on my exact portfolio management system, you can check out the Crypto and Macro Enjoyers program in the video description. Module 3 of this program is coming out this week. But as of right now, Bitcoin is still in our fair value range, trading right below what I would consider to be expensive in terms of its extension from its 200-week moving average. So I am not interested in adding any positions once Bitcoin is back in that area. And if anything, I would start taking some small profits once again. As for Ethereum, nice to see that it's trying to get above that round number of $2,000 and its old range high. We are seeing some decent narratives developing. BlackRock's Biddle Fund on Ethereum crossed above 1 billion. We're also seeing a very clear surge over the past few weeks or so in the amount of on-chain assets that this Biddle Fund is holding on Ethereum, which is outlined in green here. And we're also seeing Fidelity, the second largest asset manager in the world after BlackRock, filing for an on-chain share class of its US Treasury fund on Ethereum. So Ethereum is still dominating the institutional side of these smart contract platforms, and it is nice to see that some of this stuff is happening while Ethereum is sitting on a macro support on its Bitcoin pair, but we know its main competitor is Solana, and we are seeing Solana bounce off of that range low that we've been talking about over the past few weeks. The real level to watch will be our range mid of 160 and what Solana does once it actually retests that resistance area and whether we get rejected there or if we're able to reclaim it. Solana has some good narratives as well. BlackRock is expanding that BUIDL fund we just talked about to be on Solana also, and that does concern me for Ethereum a little bit because it is removing that institutional narrative that Ethereum kind of dominated over the past few years or so, especially if some of these institutions like BlackRock and Fidelity start diversifying to these other faster smart contract platforms. We're also seeing Fidelity planning a stablecoin launch after Solana's ETF regulatory litmus test. So Ethereum and Solana are both assets I'll be watching very closely over the next few months under this new regulatory regime. But Solana looks pretty good on its Bitcoin pair as well. We saw distribution here for almost a year and a half. We got very close to our December 2023 lows. And the real question is whether we can reclaim that range low, which would confirm a false breakdown, or if Solana gets rejected there or rejected before we get there at its 200 or 100 week moving average. That's going to decide its next trend. And it's painful to see how much Solana and Ethereum have struggled over the past few months. But if we do see Bitcoin reclaim major levels and we see Bitcoin break out higher, I would expect Solana and Ethereum to outperform Bitcoin to the upside. So we'll continue to monitor the data and price action and see what happens. But as we look forward, the federal government is still running huge deficits, and we're seeing discussions of this changing, but nothing has changed quite yet. And if this increasing deficit trend continues, that's going to make the national debt continue to increase exponentially, which will continue to increase the money supply exponentially and debase the currency. And that should be bullish for our risk assets like the S&P 500 in the long term, and especially bullish for fixed supply risk assets like Bitcoin in the long term. But as always, let me know what you expect. The next 2 weeks or so should be very interesting for Bitcoin because we are in that exact time window when Bitcoin has started moving after a global liquidity bottom. So I'm very curious to see if the same thing is happening once again, and if we're seeing early signs of that with this bounce that we've seen over the past 2 weeks. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.